Ethereum has shown the first pattern reversal signal that indicates that we're going to see the upward trend that we've been patiently waiting for. But today, I'm going to show you to make the most amount of money from the markets, you have to know how to protect your money. So we're going to look at the minimum expectations, even if the trend doesn't take off, but we can still make money. And if the trend does take off, we make a lot of money. So today is day number 3 on the Ethereum Follow Me. Let's dive straight in. So we have an Ethereum chart, and if you've watched the last 2, this is day number 3 of the Follow Me. We said the market's done a nice 1, 2, 3, 4, 5 since June, and we anticipate an A, B, C correction, and it's just been textbook. And we said, look, this looks like it could be the end of a wave 2 or a B. What does that mean in English? If you're not familiar with Elliott waves, is markets tend to move in 5s and 3s. And after a 3-wave correction, more often than not, what you'll get is a continuation of the former trend. This is the former trend, so we anticipate this high to be broken over the coming weeks. But we don't want to wait. We don't want to wait for the market to take off and then look to buy. We want to see, can we identify the low and buy early? And we've had a nice pattern reversal signal, and we've actually entered this long with me and my community. We've gone long on this, and it's very exciting. Very exciting in the sense of the trade potential. But our first objective is capital preservation. It's to focus and be a protector of our money and how we can become risk-free. So I'm going to talk about that today, and I'm going to talk about minimum expectations and the actual expectations. So let's just dive into this. By the way, I'm going to cover a lot in using really the 4 secrets that I use, and I've just filmed a masterclass for this. The 4 secrets you must know to make money from the markets consistently. It's free, it's in the description link below. Take it, it's yours, enjoy it, take notes. It will take you to the next level. I also want you to become one of my students, and it will show you in the masterclass how you can do that as well. So with Ethereum now, let's just look at the trade expectations. Why is it exciting? Exciting in the sense of we're here to make money, right? We're here to make money. We're trading this to make money. The potential of this trade is, I'm just going to quickly do this analysis down here. And the number that we want is something called a 1.618 extension. This is a wave 3 number, and this is what I would like to see happen. It's highly probable, and I would like to see this happen, right? And we'll make some fantastic profits if this occurs. But at this moment in time, we're live. We don't know if it's going to occur. So what we need to do is have something called double think. It's the paradox of trading where we have to go, right, this is what we want to happen. This is what we anticipate to happen. But what is the minimum that is likely to happen if this doesn't happen? You go, what? Come again, Jigir. All right. So that's what I'm talking about today, because this is big time, right? This is how you make money from the markets consistently. It's what the best in the world do, and that no one really, well, I haven't really seen them talk about. All right. What we're going to focus on is the green lines, right? The green lines. This will make perfect sense to you because I'm going to cover it in a way that you can really, really understand it. All right. So by the way, the signal. Remember I said at the beginning, the pattern reversal signal, the early signal. If you watched yesterday, I said swing high would be the ideal in terms of the price goes above this swing high. We haven't had that yet. And then we have these other swing highs, this one over here, this one over here. But we said the earliest signal would be a 1-bar high. And the 1-bar high was this line that we drew yesterday. If I can just zoom in, I'm going to show it to you like this. Just so you're really, really clear. We said this here, because of the momentum, if the price goes above this, we should anticipate the pattern to continue to the upside, which is highly probable, not guaranteed. And if you have a stop loss, it should be no lower than this low over here, but you could even have it tighter over here because of the way the price structure is in terms of on a lower degree time frame. Again, I covered that in the last 2 days for the Ethereum Follow Me. But what I want to cover now is minimum expectations. So we saw our actual expectations, but now we want to get our defensive hat on. We want to get our insurance hat on. We want to protect our money. How can we not guarantee, but as close to guarantee risk-free or a small profit, even if the market doesn't do what we anticipate? So when you see a 5-wave move to the downside, 1, 2, 3, 4, 5, typically as a minimum on all markets, all time frames, you'll normally see some type of 3-wave correction to the upside. So the minimum that I expect with Ethereum doesn't mean it's going to happen, but it's at least an ABC, right? We don't want an ABC, 1, 2, 3, 4, 5 and an explosive move, but this is the insurance thinking. This is the double think. This is the golfer, someone that's playing golf, a professional, where he's putting and he visualizes the ball going in, but he also has to prepare for if he misses, that he doesn't miss by too much. So the next shot is also easy. And that's what we're doing here. So I'm just going to draw something for you. It's called the Fibonacci retracement. And there's a particular ratio we want to be aware of. It's the 50%. And I'll tell you why in just a second. Let me just get it on the screen. 50%. All right. The key thing here with the 50% is, so this move to the downside, we retrace the price back up here. This is 1,492, right? So let's just call it $1,500 Ethereum. If this price gets achieved, this is the minimum expectation, because sometimes you can have something called complex corrections where the price does the minimum and then continues to the downside. So if this occurs, I'll be looking to lock in some profits on half of my position and make sure the whole position is risk-free. And we'll talk about that. If that occurs in the next couple of days, it might or might not. We'll see in the next couple of days. So today's day number 3 for Ethereum. What I also want to cover is the momentum position, right? So the last few momentum cycles, I'm just going to make this a bit bigger here so you can see it, has been really, really nice for Ethereum. And what I mean by nice is, let me just draw it like this so you can see it, because we want to use all of the information all the time. We had a nice bullish reversal here. It was a bit choppy, but it coincided nicely with this wave A low. We had a blue line go above the red here. It coincided with what we're seeing as a wave 3. And we had some type of reaction. And then here, we had this as well. This is also where CPI announcements was as well. A lot of the reversals happening around CPI, Consumer Price Index announcements. What we also got here is something called a bullish divergence. My momentum went up, price went down. So these are strong indications. So the reason I'm bringing this up is when, and it is a when, it'll probably be in the next 2-3 days, the red line goes up here and the blue line goes up here. When it's above this black line here, this is referred to as overbought. And normally it might be some type of local top being made and we anticipate some type of correction. Half of our position, I want to be out of the trade. We'll trail it in a logical, mechanical, non-emotional way. It's a business-like manner. We're not going to just exit. In fact, let me show you what we're going to do. I'll show it to you really clearly, actually. Because if you haven't seen this before, it's really powerful. Really, really powerful. So let me just draw it like this. Let me just bring this up like so. And I'm just going to get rid of this for a second. All right, so let's just say this happens. We don't know if it's going to happen, but let's just say the price really moves in our direction. It goes from here. This is the open, this is the close. And then the next day it opens and it goes up here. And then let's just say the next day again goes up here. Let's say this occurs and we go, great, our minimum criteria is met. Now we want to get risk-free. We want to exit half. But do we just exit half at the price point here? We go, no. Why? Because we don't know how far it's going to go and there's no way of knowing. So what you do instead, if you have the skill set and the functionality in your trading platform, whatever you're using, is you trail your stop loss. In other words, you can move your stop loss to a 1 bar low and then a 1 bar low. So then why this is important is the market has to move against your position to exit you. And what it will do more often than not, it will get you more of the trade. You're almost like milking as much as you can from the trade itself. And then what will happen at some point, it might be a few more bars, it might be the exact bar, we don't know, is that the bar will open and then you'll get stopped out like this. And that's a good thing. That's a good thing. We've locked in some early profits. So 1 bar low, and we don't want to exit. We don't need to exit in a rushed fashion, so to speak, because profits taken, you want to have a logical, mechanical, non-emotional way of doing this. So there you have it. Ethereum has shown the initial pattern reversal signal. It's still early. We to get more confidence, I want to see the price go over here with a bit of confidence. I would like to see the price hit this point here, and I would like to see some type of 5-wave impulse, because that would also be very, very, very important. So this is just the initial move up. I would like to see some type of impulse, and I would like to see something like this. If we get something like this, that's a really confident thing for Ethereum. We'll probably get some type of pullback, and then we'll look to compound, and then we'll get a continuation to the upside. So if you want to learn how to make money from the markets consistently, like serious money, but in a logical, mechanical, FOMO way, fear of missing out, fear, uncertainty, and doubt, and all of that, just treating trading as a business, then the masterclass is for you. The 4 secrets you must know to make money trading the markets, whether it's crypto, whether it's other markets, it's the same principles. If it's on a daily, weekly time frame, hourly time frame, 15-minute time frame, it's phenomenal how you can view the market as fear and greed. And when you can see things other people can't see, it just gives you an edge. And then you become the casino, and the casino ultimately always wins. And that's your job as a money-making machine. So I'm going to read a quote from my book, really, really relevant today, because, we was talking about, yes, we want Ethereum to go to 3,000, 4,000. It's great for the market. If you're long on Ethereum, well, then it's great for you. However, we need to be prepared for if it doesn't, and what your maximum capital exposure is, and then how to become risk-free, and then how to lock in some early profits just in case the trade moves against you. So then you just get ready for the next opportunity. So this is chapter 2. This is Warren Buffett, his quote from chapter number 2. I always start my chapters with a quote. And he says, rule number 1, never lose money. Rule number 2 is never forget. Rule number 1. Now, never losing money, that's impossible when it comes to trading the markets or investing. What you really want to do is minimize your capital exposure with a business strategy, a risk management strategy, a capital preservation strategy. And if you can do that consistently, then you're going to win long term. So join me tomorrow for day number 4 of the Follow Me on Ethereum. We're just trading it. This is a real deal. We're just trading it. We don't know what's going to happen. There's no way of knowing what's going to happen. We can just stack the odds in our favor. That's the best we can do. Trade and let the market do what the market's going to do, and then manage the trade in a professional, business-like manner.